Billy, how are you this morning?
Hey, I'm doing great, Cecelia. Real happy to be here again with you.
I am glad to keep doing this. I love that we're pushing out great information to current clients, future clients, the general public about, all the different products and services we have to offer. And so right now we see a problem in our market, which is this increase in mortgage rates, right?
Yeah.
And with the increase in sales prices with houses, along with the higher rates, we're finding that buyers are struggling to, get into houses. And so we're seeing lenders come up with different solutions, but they're not always the best solutions because the seller is either taking the hit or a buyer is looking to come up with more money. And we know that buyers are already strapped for funds most of the time. So I heard on TikTok about a great program, and I want you to tell us more about it.
Yeah, it's funny that you heard it on TikTok because I think I'm doing okay for an old guy working the TikTok circuit these days. So I'm glad to hear that it's being the message is getting out there. So yeah, and I'm happy to share this with you. I'm really excited about it. So, as you know, you just mentioned, I should say, mortgage rates have been, they're not skyrocketing. They're not out of control. They're just higher than what they were for the last 2 years. And part of that's because of COVID. We dropped the rates to kind of help stabilize the economy. And, people got used to the idea that mortgage interest rates were going to be anywhere from 2.5% to 4% because that's what we've seen. Well, since we've been out of COVID, we've started to see the interest rates rise again, and they're going back to what they were pre-COVID. And psychologically, it's just creating a hurdle for a lot of buyers because they're finding out that, hey, look, that associated with just a lot of the equity that's been increased in the sales prices and, in the homes has increased sales prices, I should say, has kind of created a challenge that you just can't overcome. It's this mental hurdle that they just can't get past. And it's frustrating to a consumer. They maybe started the process when the rates were 3.5%, and now they're being quoted a rate that might be anywhere from 6.25% to 6.75% in today's current market. Depending on the loan program product and credit scores and qualifying standards, things like that. So as an industry, we came out with this program called, we went back to, I should say, a program that we had back in the early 2000s when I first got in the business. It's called an FHA 2-1 Buydown. And it really is. It's a great way to help a consumer to have the ability to kind of offset that higher interest rate and be able to get into a lower interest rate and at least give them the ability to kind of like ease into their mortgage payment at a lower payment. It's a temporary buy down and it's expensive. So what we saw was that this solution to a challenge really created another challenge for a lot of home buyers.
Yeah.
And that challenge was cost. It was very expensive to participate in a 2-1 buy down. And it wasn't just expensive for the home buyer. In some cases, it was even the expense was carried on to the home seller because somebody had to help pay the cost of the buy down. So just to give you an example of what that looked like, here's a scenario for a $400,000 loan that I've put together for you that was implementing a 2-1 buy down. And as you can see on the screen, the cost of the buy down was $8,382. Now, Cecelia, you tell me, give me some insight. Do you think that's an expense that many consumers are able to overcome?
No, I mean, most of my buyers are looking for ways to either get seller closing help to get into the house, not so much have to have this additional price tag on top of it. So it has not been good.
All right. Now, with these 2-1 buy downs conversations, tell me about it from a listing agent's perspective and talking with a seller. When a buyer comes to a seller and says, hey, look, we want you to pay for our 2-1 buy down and also our closing costs, what's typically the reaction or response that you got from sellers in those situations?
Very frustrated sellers. They already feel like they're bearing so much of the cost of selling their house. And granted, they have gained this equity, but again, they're turning around and having to buy a house. So they're feeling like they're bearing all this cost to now sell the house. And that's a lot. It is a lot to ask.
Yeah, so we can agree that this has been an expensive proposal that just a lot of people can't overcome, right?
Correct.
All right. So myself, along with other managers here at Caliber Home Loans, our leadership team got together and started really thinking about, the problem and trying to find a solution that was going to give everybody the ability to succeed. Home buyers, home sellers, mortgage professionals, real estate professionals. We really want to make sure that we're trying to come up with a creative and aggressive way to help combat and overcome these challenges that a lot of home buyers are experiencing in today's current market. So what we came out with is a two-pronged approach to this problem, and this strategy is really aggressive again. And the first part of it is, and I'm going to talk about that a little bit, is called the Caliber Rate Remedy. That's a mouthful. So what is it, right? People are always asking, all right, tell us about this rate remedy program. And what it is exactly what it says. It's a remedy. It's a remedy to solve a solution or be a solution to solve a problem that a lot of people are experiencing right now. And that is higher payments because of higher interest rates, gives them payment relief. And then ultimately what we're doing here is we're offering a temporary buy down, just like 2-1 buy down, that's going to give the ability for the consumer to take a lower interest rate. But keep in mind, it's temporary and it's only the rate is lowered for the first year of the mortgage, right? And what it does is it saves them money. It's going to save them on interest for that first 12 months by experiencing lower payments during that period. But then also by reducing their monthly mortgage payment, it's going to free up some money for a buyer, because we all know that when buyers purchase homes, they go into it. They got to furnish the house in most cases. Maybe there's some small, cosmetic things that they want to do to fix it up, because everybody wants to take that home and make it their own home. And that extra savings and money that we're going to provide to the consumer is going to give them the ability to do that. And again, it's lender paid. We are paying for this expense. I just showed you an example of how a buy down was going to cost a buyer $8,000 on a $400,000 loan. Well, that's expensive for the buyer or the seller to have to pay. But what do you care if we're paying for it, right?
Absolutely. I mean, that's nice that I'm not going back to a seller saying, hey, to help the buyer get into this house, can you come up with an extra $10,000?
Right, exactly. So again, we're being very aggressive in today's market because we want the business. We want to earn the business. And one of the ways we can do that is by offering these incentives. So I'm going to show you an example right now. This is a real-time example of a file that I'm working on today, where I have a consumer who's purchasing a home. It's a veteran buyer, and they're purchasing the home for $400,000. And based on the strength of their credit and the loan program being VA, the rate that I'm able to offer them today is 6.25%, 6.25%. The monthly principal and interest payment is $24.62. By the time you throw taxes and insurance in there, it's going to be around $28.87, right? So that's a $400,000 loan that would be offered to the consumer if we were not providing this rate remedy solution. So here's a look at what it looks like for the buyer for the first 12 months of the loan. Same thing, $400,000 purchase price, $400,000 loan amount, but instead of a 6.25% rate, we're giving them as a gift, our gift to the consumer, a lower interest rate for the first 12 months at 5.25%. So we're reducing that rate for the consumer by 1 full percentage point. And as a result, their total monthly payment, including taxes and insurance, now goes down to $2,633. So that is a overall total monthly savings of over $200 a month, right?
That's pretty sweet. So that's about what, $2,400. That's nothing to sneeze at.
About $2,500 a year. I rounded it down to just over $200. In this scenario, it's like 230 some dollars, but still, it's nothing to sneeze at. You're right. I mean, and the best part about it is, again, no cost to the consumer. Nobody has to pay for this. We're doing this just as an aggressive act to try to make sure that we're giving ourselves the opportunity to earn the business of a home buyer in today's current market by providing them with something of value. We're giving them something of value here. So, and that's phase one of this product. I mean, again, we're being super aggressive by this. People are always asking, like, the next question is, all right, well, you're giving me this great loan. I get this lower interest rate for, the first year. What if the rates go down, right?
Right.
Everybody wants to know because they're predicting that the opportunity for refinances is going to happen in the next 12 to 24 months. We're going to see rates go down. Every expert in the industry is predicting this. Every economist is projecting that we're going to see rates go down. Now, I don't have a crystal ball. Once a long time ago, as a closing gift, the client gave me a magic 8 ball because I always get asked that question, what are the rates going to do? And no one ever really knows because the market can be very volatile in some cases. But we do have indicators. We have history to kind of give us an idea of what to project and what to expect in the market. And one of the things that I can tell you is, just historically speaking, we know that during times of inflation, the Federal Reserve Chairman is going to raise interest rates to help fight inflation. Well, the buzzword for 2023 is recession. We're already starting to hear it. The actual definition of a recession is in place. It's when the average GDP for over 2 months is at a certain level, and that's where we are right now. So technically, by definition, we're in a recession period. And again, the same way that the Federal Reserve fights inflation by raising interest rates, the Federal Reserve is going to fight a recession by lowering interest rates. So again, every economist, every mortgage industry expert, everybody's predicting that rates are going to go down. How low will they go? That's really the answer, right? Or the question. So
Right.
here what I have on the screen right now, what you're seeing is mortgage rate projections for the coming year. And they're included Freddie Mac, Fannie Mae, the Mortgage Bankers Association, MBA, NAR, which is the National Association of Realtors. And then we have an average of all four. So if you look all the way to Q4 of this year, there's an average projection of about 5.73%. I've seen some experts predicting this could go as low as 5%, 4.75, even going into 2024. So this is just this year. Again, I said 12 to 24 months, we're going to see another, opportunity for buyers in this market to refinance their existing loans. And this is one of the ways that we do it, is we're offering this rate rollback program in which anyone who purchases a home using Caliber Home Loans as their lender, and I believe it's through March the 31st of this year, we're going to give them the ability to refinance their existing Caliber loan at any point between now and December 31st, 2024, and we're going to waive all lender fees. Okay?
All lender fees?
All lender fees. So when you think about that for a second, what does that mean? We're giving the consumer the ability to benefit in their payment by giving them that 1-year buy down at our cost. And then if and when, again, projecting that our history is going to be accurate here, that interest rates are going to go down in the next 12 to 24 months, they're going to be able to refinance that existing loan, and we're going to waive all lender fees. Again, this is a super aggressive way that Caliber Home Loans is working to make sure that we're earning the opportunity to help as many buyers as we possibly can in the coming year.
That is amazing. I mean, really, it gives buyers the peace of mind to know that should the rates drop, that they have a way to jump on that ship too, without the worries of the cost of it all hanging over their head. So it really kind of takes away the thought process of wait until rates drop to buy a house.
And I'm glad that you touched on that, Cecelia, because I had a client ask me the other day, they were like, well, how will I know when rates drop? It's not something that I really look at. We have systems in place internally that notify us of all of our loans that are in our past or closed pipeline, clients that we've helped in the past with purchasing homes, what their interest rates are, and we're notified electronically immediately when the market hits a certain level that there's a tangible net benefit and opportunity for that consumer to refinance their loan. And you better believe that I'm going to give those folks a call the moment that those opportunities are created, and let them know about them so that they can make an educated opinion as to whether or not they want to proceed with a refinance, or if they want to continue to float the market and see if the market gets a little bit better and they can secure a lower interest rate and payment again.
Well, and they have till the end of 2024 to,
Right.
get on this great program, as long as they are closing by March 31st with you, correct?
That is correct. Yeah.
Okay.
I'm hoping, and I'm going to be at a business meeting this week, Thursday and Friday this week, and I'm hoping that we're going to have some discussions about maybe extending that program through March, maybe going a little bit further, deeper into the summer months. But we want to create as much opportunity and incentivize our clients to take advantage of this program as possible. I mean, it really is aggressive. I think it's aggressive in a good way. it's going to be hugely beneficial to folks that are interested in purchasing homes.
Absolutely. Yeah. It's a nice safety blanket.
Absolutely. So if anyone has any questions about this, feel free to give me a call. This is my contact information that you're seeing on the screen right now. I'm at 301-440-9102. My email address is bill.saunders@Caliber Home Loans, and my website is dmvloanofficer.com. You can simply go there and apply, and then we'll reach out to you pretty quickly. Now, Cecelia, we talk about your homes for heroes all the time, right?
Absolutely.
I bet you're probably wondering, does this benefit our heroes as well?
It does. I heard about that VA loan you just talked about.
Right? So it doesn't matter whether the consumer is using a VA loan, an FHA loan, a USDA loan, or a conventional loan. We're going to offer this to those individuals. And if they're one of our heroes, they're certainly going to benefit that much more. However, there are some folks who are not, some ways I should say, that we're not going to be able to pair this with other loan programs and products. If you're a consumer and you're participating in a down payment assistance program, or you're receiving any grants or gifts from outside resources that would apply that affect the interest rates, unfortunately, you're not going to be able to pair this with that particular product. But that's going to be few and far between, I think, and there's benefits on those as well that you might be able to benefit from, where you can't get the lower rate, but you're going to get the down payment assistance. So there's a lot of ways that we can kind of mix and match this up to make sure that the consumer is going to be given the best preferential treatment as possible.
Absolutely. And that's our goal, is to make sure people are getting the best deal and the greatest service and saving that money, right?
100% correct. Yep, absolutely.
So, well, again, thank you, Billy. That was great information. I know a lot of people, don't like to be on TikTok. So I want to make sure we're streaming this through acceptable channels and they can really understand what is out there, because opportunity comes when you know what is available to you.
100% correct on that, Cecelia. So again, thank you for giving me the opportunity to kind of talk about this and share this information, because I'm excited to help as many people as I can, and I know you are as well.
Yes, I sent 2 people recently that hopefully we can get into these programs, because they're
Well
just
underway.
fantastic. So, well, you have a great day, and I look forward to our next meeting.
Absolutely. Thanks, Cecelia. Take care.
Bye-bye.